I don't think it is at all, because I don't think the fundamental issues have been addressed, and the fundamental issues remain the high level of dollar-denominated debt, and in a world where dollar interest rates are rising, that is only going to become a bigger issue. And we've obviously not dealt with the fundamental issue with regard to tariffs. We don't think we've seen the end of the trade war yet. From that perspective, why would I suddenly start wanting to go back into that market? I think the interesting bit is if you look overall at the performance of those markets this year, all down in dollar terms. In fact, the only markets that really are up is going to be US markets.
We are talking so much about the emerging markets story right now. It is important because it's been the epicenter, so to speak, with Turkey, Argentina, and everything else. We are not as much focused right now on Europe. The Bank of England, the European Central Bank still have a lot of sway right now. Are they up there at the same level of importance as the Fed with regard to the global macro picture? Which is the most important central bank out there right now?
It's always going to be the Fed. It has been through my entire career, and it's not changed now. You only have to look at the impact that Mr. Powell's comments had back at Jackson Hole to see that broader impact. Bank of England does matter, but only in the sense that it provides a degree of stability going into what could be a particularly turbulent latter part of the year with the Brexit story. ECB does matter, but that's against the backdrop of a developing potential financial crisis in Italy, the debate over the budget. Of those, I'd always choose the Fed as being the most significant.
So if they are the most significant, it also highlights the fact that the U.S. seems to be, at this point, the only game in town. It's the U.S. and then everybody else. Is that trend, that momentum that you can sustain? Should you ride this momentum wave for the U.S. versus everybody else out there? There's been a massive bifurcation.
And I think that massive bifurcation actually is possibly one of the most worrying things of all. If you look, it's incredibly rare for US equity markets to be totally divorced from what's happening in markets elsewhere in the world. You don't get this kind of divergence that often. I think the only two times in the last 20 years I remember would be 2015, when US markets underperformed because everywhere else was getting the benefits of negative interest rates. And in the summer of 2000, August and September, when you had US markets continue to creep higher, but everywhere else recognized that we're at the top of the cycle. That's a worrying sign.